learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and we're going to go over inflation and getting ready for this CPI report. But before we do that, we got to talk about the meme stock rally. If you didn't notice it today, AMC, GME, Bed Bath & Beyond, they all went crazy. But like, Josh, why do you care? Why is Josh talking about this? Well, let me show you. Here is one article saying the meme stock frenzy returns and is baffling Wall Street smart guys. But here's another one. Here is this chart showing you retail stocks performance versus hedge funds. And this month right now, we are doing the best since the meme stock rally in 2021. So why am I bringing this to you? Unfortunately, I'm going to need like 50 more likes to tell you. It's kind of tinfoil, so I'll wait. Let me get my 50 likes. So like the video and I'm going to tell you. Okay, I'm waiting still. You like this shirt? I'll tell you about this. Old school, if you remember, baby. But no, here's what I'm trying to say now. The whole point that I have with this, because as we're getting ready for CPI, pretty much I am viewing the meme stocks as a hedge. So I got a BBBY play. We're going to go over it. But essentially, why I'm pointing this out right now, we got a couple of days until the CPI. Depending on how these meme stocks move, it could give a signal. But essentially, I'm thinking that if the CPI is bearish, you could still have the meme stocks rally as kind of a alternative, sector not really affected by things. But then if the CPI comes in very positive and lowers, I think that would give a little bit more fuel to some of the meme stocks moving in a way they haven't in a while. So keep that in mind. We're going to go over that, but I have so much more to share with you. We're going to go over what happened today, what we're looking at coming into Wednesday, and then any plays that we made and what to watch for the rest of the week. So drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. It's free 99. We'll see you there, baby. But as far as the keys, I cannot say this enough. I'm going to have to say this many, many times, and I really hope people get it. The stock market is in purgatory, and nothing matters until Wednesday morning. What I mean by that, today had a little bit for the bulls and bears. It looked very bullish in the morning, and then it ended up sliding. There wasn't really too much news. It was like good news here, bad news there. You had a little bit of the Buffett effect. We had some earnings guidance in the morning, which wasn't good, but the whole idea here is up until we get that CPI, we're going to watch Fed futures and a couple of things move, but any move right now, it's nothing certain except for we hit the top end of the range at 417. We got a little bit of support at 413 and 407, but whatever happens with the CPI, that is going to be the real big driver that we want to watch. So with that being said now, one thing that's happened here in the last couple of days, you have been watching that chorus from Wall Street, JP Morgan, Goldman Sachs. They are now talking about bigger rate hikes. We saw the Fed futures. They came up to 62% today from 52, but now you still got a lot of people talking, hey, maybe this is a bear market rally. Even JP Morgan, Kalanovic, after hours, this guy is like notoriously bullish, and he said, I would modestly trim stocks and go for commodities. But point is, leading into the CPI, we're going to watch how things change, but that's really the moment. Up until Wednesday morning, nothing really matters up or downside, because once that data comes in, it will confirm the trend. So watch out for that. Coming into the second key now, today would have been absolutely different without NVDA guidance. So even though a lot of the earnings have wrapped up, or at least the big names, we're still going to hear from companies, keep a watch out for any guidance, whether it's an update before their earnings or afterwards. Again, NVIDIA isn't supposed to report till later, but they came out with this guidance here, and that did not look good at all, and people were really, really worried about that. But like I was saying, today had a lot of ups and downs, and if NVIDIA didn't report that in the morning, we could have had a lot better of a day. So even though we're wrapping up earnings season just with the Fed and CPI, remember, you're going to have an extra month until the Fed. Just keep your eyes out for any industries and any other earnings effects. Those will be important. But now finally, coming into the CPI. And just to give you a little bit of a breakdown and what to expect, I will go over this tomorrow, but like we said yesterday, here is that picture with the dotted line being core. That's expected to go up, and headline is expected to come down, and pretty much that is going to be the real big key here, because even if you get a headline number dropping, people may like that. That's because of gas and all of that, but that core number, well, it may be able to override any headline drop. So watch out for that. And another one, we went over this today, just keep in mind, out of the last 7 CPI reports this month, only 1 out of 7 has led to a gain on the S&P larger than 0.25%, and that was literally last month's CPI, which was 1%. So keep all of that in mind. A lot is on the table. A lot's going to move around, and a lot of motions are up. But again, until that report comes out, we're not going to know what's going to happen. But when it does, it's game time, baby. So let us get into the play. So right off the bat, like I said, the meme stocks, baby, I did make a play on BBBY. So again, the meme stock frenzy returns and is baffling the Wall Street smart guys. I already shared with you my thesis. My whole idea with this is to get some sort of upside hedge with this to match up with some of the bearish plays that we already made, or if we do add any other bearish plays depending on where the CPI comes out. So that's why I went with it. I did go for a small play. I only spent $200, but as you see what I wrote here, the move is definitely going to be debit spreads. I noticed this with the SQQs. We even did it with the LMT, but the whole idea here is these meme stocks go crazy. The IV shoots through the roof. The idea is try to get closer to the money, or even if you go further out of the money, you could sell way more juice out of the money calls, lower your top end gain, but now it could give you a decently sized position. So pretty much this morning, I grabbed BBBY August 19th $20 calls, and then I shorted the 26 calls, but instead of paying $1.50 for a BBBY in the morning, I only had to spend about 41 cents. So you see how it moved. We were even up on it a little bit, but by the end of the day, that play was only down $20. The original contract, it dropped $197 on that same amount that I bought, but since we shorted the 26s, we got back a majority of the premium that we lost. So with any of these plays, again, even the SQQ, that's the same one. Even though we had a lot of volatility and a couple of markets closed green, we actually wound up with a positive SQQQ today. So that one was a little interesting, but those contracts, they didn't move too crazy. But I am liking the debit spreads. Like I'm saying, I'm liking Bed Bath & Beyond, any of the meme stocks as a hedge, and I just want to see how they perform. Again, if they go down with the market or they kind of fall in line back with a couple weeks ago, that plays out the window. But depending on with the momentum we have now, if this plays out weird with CPI, I'm hoping it could provide a good hedge. And the fact is, a lot of the other plays I would normally get for upside, a lot of them have already moved a lot since the bottom. So keep that in mind. But that is play number 1. Play number 2 now, Ford and GM. We've been talking about this a bunch, but why I like it, not only have they had good earnings and continuations, but literally that passing of the climate, EV, and this whole like Build Back or Inflation Reduction Act, all of that, it had a lot of effect on the market today, and that's what you got to keep in mind. Beyond the NVDA guidance, there was market reacting to that, and you also had the Buffett effect as well too. But Ford and GM, they were doing great. They benefited off that, and really I'm thinking for the mid to long term, those EV credits that Ford and GM can now get, which they didn't have, just remember how much Tesla made off of that, that might actually produce a good response, and that's why I think they did hold up a little bit better than not. So I have no more option plays, just the shares, but I'm definitely going to be looking out for those. If those get cheaper leading into CPI or post CPI, that would definitely be an area that I'd be looking. So watch out for them. That's number 2. And then finally, baby, number 3, NVIDIA. So this one's a little bit weird, but essentially, let's say the CPI ends up bullish and people don't freak out as much. The numbers, both core and headline, kind of balance out. If that is bullish, I would be taking calls on NVIDIA, and it doesn't, though you don't really need that first step of it, but this is what I want you to understand. A lot of bad got priced in today. Again, them coming out, slashing their guidance before earnings, stock dropping 8-9%. Again, tech went negative today, believe it or not, even though we had a lot of good green names, and it was because chips did so bad. But what I'm trying to say, if we see any bullish trend, whether it's from CPI or not, NVIDIA had a lot priced into the downside, killed a lot of the contracts. You may get a nice upside move, especially if everybody in the market can chill out. So watch out for that. Those were the top 3 plays. As far as anything else, I didn't make any other plays. I think I grabbed the only other one I shorted slash ZQ. This is a Fed future short, and pretty much I'm not expecting to lose a lot. This shouldn't really move too much. That means I probably shouldn't make a lot anyways, but the whole idea of this play is simply if those Fed futures move and the market starts pricing in 75 or higher, that's how we make money. If it goes back to 50, theoretically it's already there. We shouldn't pretty much lose anything. So we'll see. I made that play. We got the BBBYs, and then I ghetto spreaded the Unity, baby. 1,000%. We bought these contracts at 40 cents. They went up to $4 today. As it was getting up there, I said, okay, I want to take some profits, but I still kind of want to push it. We own the 60 contract. We paid $40 for that. Today, I shorted the 70 contract, $10 further out the money, but I got $1.75. So I spent $40 for the cheaper one. Now we sold the more out the money for pretty much 300%. I can't lose anything but 130 profit on this play, even if both go to 0. That's why we do the ghetto spread. But also, if it does run up to 70, we would still make $1,000. So thought it would be wise, take some profits. We had a dope play. Again, we called it out. Shout out if you hit it. Be wise, use your balance to let you know. Again, you could sell another one. If you have more than one, you make it free. You could ghetto spread, but the choice is yours, my friend. So God bless you on that. I did that one, and then we had an old TTD that we bought a couple of weeks ago off of earnings. It went up 100%. I sold that, and then that's pretty much it. We're watching oil again. We've been talking about this. I haven't really made any crazy plays, and I keep bringing this up at the end of these videos. Just watch out for it, because again, depending on if it's a recession and then commodities do second wave or demand destruction, it's going to say a lot. So that's what we need to be watching for. Other than that, going to be watching bonds, yield curve, Fed futures, see how it kind of lines up leading into this, meme stocks as a hedge, and then waiting for the CPI, interpreting that, and I think that's going to give us the rest of August until we get into September and the Fed. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, you got to set those goals and keep reaching as if you never got anything. Oh yeah, some of y'all are blessed, and sometimes you don't realize it. I need you to reach and aim high and pray like this is the first thing you trying to get. And remember, Chad, our back was against the ropes, but we kept on bouncing back. Okay, I had to cut that out because I got too crazy. My face got in there. But listen, Chad, I love you. Stay in the game. We are entering a pivotal moment. This is going to be a big week, but even then, the week after this or the month after in September, that'll be another move. And before you know it, it's the end of the year. But you've already been trained, baby. So I love you. I'll see you in the morning. Have a good night's sleep. And I love the Chad. I love the Chad. That's it. And I broke the horn already, but it still works, I think. Hold on. Yeah, so I lost the top. So now I got this little thing. It don't have the same like impact like visually, but it still hits. You know what I'm saying? Now look, I'm like, you want to hit this time? Yeah. Okay. I'm gonna just go. Okay. Bye.